This is it, guys. Thanksgiving and Black Friday is basically here. I think today is Thanksgiving in the USA and Black Friday would be tomorrow. So we need to be seeing something good, right? We need to be seeing something good. That's the only reason I'm making this video, because we need to be seeing something very, very nice. And we've seen that already. A pretty decent price movement from, you know, around 24 hours ago, or a little bit more, maybe 36 hours ago. We're down here in the 56 to 55k region. We pushed upwards and we got upwards of around 59.5k, but we're ultimately still rejecting from this descending triangular formation, which is not very nice to see. Usually when you see a rejection from the top, you end up seeing a retest of the bottom. That's not always the case, right? You can see that we saw a rejection from the top here, and we came back down and formed a little W formation, retested the top again. Even though it failed, it does happen occasionally. Now, we need to be seeing that, right? We've got no time left to just lurk around, you know. And I would say that if we do drop below this triangular region at around 55.5k, and we close below that in the daily candle, that's going to be extremely worrying. You can see my you know, alerts on TradingView here below this region, because I need to be awake for that and see what's going to happen with the market at that point. I think that, you know, if we go below that region, what I can do is go to the daily chart. The most likely zone of support from that point is going to be 53k. And we've explained in previous videos that a lot of people are thinking that 53k is a nice region for a bounce. And look, I do agree with you to some extent. And we'll bring up some indicators and explain why. Let me just get the bull market support band up. We can see that 53k, we'll actually label it out here. 53k is right here, right? There's a little blue line, we'll make that bigger. That's 53k. We can see the bull market support band is pushing up on 53k. We can see we have the VVPR in a crevice at 53k, the lowest point. And what this means is if we go to 53k and we start wicking below it, those wicks will be eaten up quite quickly, and we'll have some massive support at 53k. So not only do we have the bull market support band, we also have a crevice on the VVPR, and we also have the 100-day SMA in that region right now at around 54k. Right, so that's another, you know, pretty major support zone, dynamic support in that region. So look, I'm not saying 53k is a weak spot at all. It's not, right? 53k is definitely a strong support zone, but the reason why it is concerning to me that we would be retesting 53k at this point, and I'm not saying we are, I'm saying that, you know, it would be very, very concerning if we did. That is because we've never really done that, right? We've never come back down in a bull market, and I know that some of you are saying, well, the 4-year cycle doesn't matter anymore because it's invalidated. I don't think it's invalidated yet, and even if it is invalidated, the point is we still haven't done that before, right? It's still worrying, because when you see things that happened before, regardless of whether you believe in the 4-year cycle or not, it's worrying. You don't want to see that. You know, we don't want to be seeing that happen. We haven't retested a previous high this late into the bull market before, and we don't want to be making unique things occur this late into the cycle. What we want to be seeing is a break to the upside, right? We can see that 53k does offer support for sure, right? Not only do we have all of the things we just listed, but also historically, it offered resistance here, support here, support here, support here, and then ultimately we broke through and it offered resistance, and then we dropped down in May, right? So it's a major spot, and essentially what it is it's a dividing area between a bearish market and a bullish market. So below 53k this year at least has been historically bearish price action, and above it has been historically bullish price action. You would not notice that by the Bitcoin chart, but you can see that in May, in this period here, that's when altcoins really started to run, and that's where the bulk of gains were made in this cryptocurrency market in May. And below 53k, we had, you know, this whole period here where people lost a lot of money, and also this September period here where people lost a lot of money as well. So it's pretty clearly the line in the sand that we want to be holding in Bitcoin is very much on a knife's edge at that point. So, but what I'm saying is, you know, it's a last resort. There is support there. We will bounce there, right? I'm confident we will bounce there, but I'm not confident that the bounce at 53k will take us all the way back to all-time highs. It could happen. I don't think it's the most likely scenario. I think that if we retest 53k, we're going in blind, right? Because it hasn't happened before. And the whole point of investing is relying on previous trends to indicate future trends. And if that hasn't happened before, you know, we're in a bit of a troubling spot, and I wouldn't really want to be overexposed at that point. What I think is likely, though, is that if we do come down to 53k, and I'm speaking the worst case scenario here, right? I'm not saying we're going to go down there. If we do come down to 53k, what I think will happen is at least a bounce, right? Whatever it may be, a dead cat bounce, similar to the one we had in May. And I think that altcoins will start to rally massively in this bounce, just like in May. And then when people realize, hey, Bitcoin's not actually following this rally, Bitcoin's topped out, that's when we'll see a crash down below 53k once again. So regardless of what happens, I think that 53k will offer support and will offer bounce territory. I'm just not really sure that, you know, something like this will play out, where a lot of people are expecting we go down, we bounce around for a bit, and then we start going, you know, a parabolic again. I don't really see that. It just doesn't look right to me. And, you know, from all the experience in charting that I have, it looks a bit optimistic, right? So ideally, we want to be holding this triangle right now. We can see that we've actually failed to close above it on the daily candle once again, and we've seen a little bit of green in this morning as well. What we do have though is a bullish divergence that has proved itself here when we were moving downwards. We had a bullish divergence, which is great to see. It means that there's not too much selling pressure. We also have a primed bullish MACD cross that is coming in. You can see the histogram is you know, trending towards the green, which is good to see. It means that selling momentum is slowing down and buying momentum is picking back up, but ultimately we're still facing resistance at the top of this triangle. So what I'm looking at in the next few days is basically whether this triangle will break, right? And more importantly, the next, you know, 1 or 2 days, because this is really, as I said before, the most bullish week in the cryptocurrency market, and it has proved to be bullish so far, right? You know, if we go back to the start of the week, we were trending down here at around 55k, and we've moved up, you know, 6-7% already just in this week period, but it's not enough, right? It's not enough. We need to be breaking this triangle. It's pretty clear that we're in a downwards trend. A descending triangle is typically a bearish formation as well, so there's not much stuff to be reassured about in Bitcoin. What I can say is that most altcoins look pretty good right now, and that's what I mean. It's, if we go down to 53k, I think that altcoins are going to do very, very well, but I think that the best scenario for us is breaking above here, going to new all-time highs, seeing an altcoin season later in the year, or possibly 2022 as well, or most likely 2022, and then the altcoin season will be even bigger because there'll be more money in the market to flow down to altcoins. What I'm waiting for Bitcoin for a full continuation is not only a break of this descending triangle formation, not only a close above it on the daily chart, but also a break of this bearish, well, I guess you could say RSI resistance, right? You could see pretty clear RSI resistance, similar to the one we saw in September here, where we were, you know, the price was trending upwards, RSI was trending downwards, and it acted as resistance until we broke through on this big green daily candle, and we saw a rally after that. And we also saw a similar thing happen in May, where we had this RSI resistance throughout the entire year, right? We finally broke it in around July in this region, and we saw a massive rally to the upside, right? So we need to be breaking that yellow RSI line. And I think that's going to come at around 61.1k, and I'll show you why. And I've gone through this in the past, but I'm just going over it again because it still stands to be very, very important, way more important than any altcoin update I could give you right now. And that's why I'm giving you another video on it, because, you know, I don't really see the point right now in doing too many altcoin videos and giving people a lot of hope when realistically we want to see Bitcoin doing its thing first, right? And another reason why I think 61k is a very, very important zone, 61.1k, is because not only because I think that at that region we should be breaking through this RSI resistance line, but we'll have to see that in the future, right? We may not be, but because that is the POC on the VVPR, so above 61.2k, it should get progressively easier for Bitcoin to move up in valuation, and we should basically be, you know, open season from that point, for lack of a better term. So look, I'm looking at multiple things: the triangle, the RSI resistance, the VVPR on multiple time frames. But the triangle is definitely the most important part. What we don't want to be seeing right now is continuous retests of the bottom area here, especially in the most bullish week of the market. You know, it's just not what we want to be seeing. And given the fact that it is a bearish triangular formation, right, descending triangle formation, you know, we don't want to be increasing the odds of a downside break via constant retests. We want to be convincing people that, hey, the buying momentum is back, and so what we actually want to be doing is forming a higher low anywhere in this region, as long as it's not all the way down here, and then swiping back up to the upside and breaking through within the next probably 48 hours, right? Well, that would be the most healthy scenario. That's what we're looking for, guys. Hope you enjoyed, and I'll catch you in the next one.